Welcome back. In today's video, I'm going to be breaking down exactly how many shares of Palantir I think it would take to retire in 2030 exclusively off of a Palantir investment. Now, I saw a great video on this a few years ago with this premise, so I wanted to redo the analysis with the recent run, and now I think it's a great time to revisit it. So the plan, working backwards, is to start with annual spending in retirement, decide how many years to fund, and compute the 2030 nest egg for present value and map that to a PLTR share count across valuation scenarios. So obviously this is just arbitrary planning, not financial advice, and you'd have to adjust the inputs for your situation. But the first step is, what does a normal household spend look like? The Consumer Expenditure Survey in 2023, 2024 isn't out yet, so 2023 was 77,000 roughly US dollars per year, about over $6,000, $6,500 per month. So we'll anchor it at 77.3 thousand as a middle of the road target, and spending is going to vary by location and lifestyle. Raise or lower this to fit your reality. But step two is how many years to fund. Typical retirement is often running about 20 years, so we can round up to 25 to add some longevity. Step three is finding out what this 2030 nest egg has to be. The goal is going to be $77,000 per year for 25 years. So this 7% is going to be the real interest rate, which is going to be including inflation. So the present value of the annuity is going to be $900,000. If you're only spending $60,000 a year, that would be about $700,000. So let's just take a reality check. I'm just going to pick a random amount of shares. It looks like the average Palantir investor has, based on some surveys, around 1,000. So let's just randomly assign this to 869 shares. That's roughly $154,000 today at today's prices. It's great progress, but it's far from the 900,000 goal for 2030. So that's the gap we're trying to close via some different PLTR outcomes. So let's have a look here. Let's set up the assumptions. Today's baseline market cap is $420 billion, with shares outstanding at 2.37 billion. The share count by 2030, we're going to assume about 1% net growth per year, getting to about 2.5 billion shares by 2030. Now, I think that's very conservative. I think the share count could actually be lower, but we'll just leave it there. So for each scenario, we're going to show the 2030 market cap, the implied price per share, shares needed, more shares to go beyond the 869 example we have, and the ballpark cost to accumulate those shares. So if dilution is lower or buybacks are larger, which I really do expect, required share count is going to go down. So here's scenario one, the low scenario. 350 billion market cap, multiple compresses, slower growth, everything goes wrong, right? You're actually going to have to, this doesn't even make sense to show, because you're going to have to buy more shares and spend over $1 million to get to that 900,000. No one likes to say it, but there's a lot at risk to being so highly invested in volatile names like these AI stocks. While you accumulate, you can pair that long-term bet with a rules-based market-neutral sidecar, a separate long-short book designed to be uncorrelated to stocks and bonds, smoothing out the ride and funding contributions back into your portfolio. Visual Sectors shows exactly how to do this each week. Pick 7 longs, 7 shorts, apply risk-adjusted position sizing, and rebalance by the rules. For context, here's one back-tested variant, logging about 27% annualized, with positive years across bull and bear conditions. And it's designed to be managed in under an hour a week. A real user, Luke, reported $10,000 in profit in August, up 17% in that month alone. Your retirement share count becomes more realistic if your portfolio volatility and downsides are managed. Historical mixes that added a market-neutral sleeve reduced volatility and improved risk versus plain portfolio management. Get this step-by-step playbook with Visual Sectors and the free trial, link in the top of the description. Let's get to the mid scenario. $600 billion market cap, steady compounding, very little, if any, growth. Of course, there is growth, but it's less than a doubling over the next 5 years. So about 15% compound annual growth rate. We see a $241 price per share, shares needed. So probably not enough to retire on if we're sticking with this scenario, unless you have more shares than around 1,000 or so. So it's plausible continuation if execution stays solid. Situation 3, let's take a look at a higher scenario where Palantir reaches a $1 trillion market cap and has that durable leadership in defense and commercial AI that we are expecting. So that's a 2030 price per share of over $400, and that's going to be another 900,000 worth of dollars worth of shares needed for 2,244 shares. So that's going to be an extra 1,375 needed at today's price, roughly 400,000. So again, still falling short. And you might say we're being a little ambitious with the 2030 target, but that's what it looks like at a $1 trillion market cap. If you have 1,000 shares, that's not going to be enough. You're actually going to need about 2,000 shares for a retirement scenario. 1 trillion, I think, would be a very base scenario, certainly not an upside one. So let's take a look at what happens if the stars align and we get a $2 trillion market cap as Palantir becomes a category killer. Well, that's 2030 price per share of $800, over $800, meaning shares needed for 900,000 that we're looking for would be 1,122. So that's very close to where we currently are with our target of around 1,000. So at today's price, if you throw in another 253 shares, you get to that target. So these scenarios certainly aren't crazy. I think they're pretty down to earth. Palantir's already in the $400 billion range, and analysts have raised targets on growth in U.S. commercial and defense and sovereign, and we used a 7% real rate to translate spending to the nest egg, which is each 1% shift plus or minus meaningfully adjusts the target. The risks are the single stock concentration, taxes, sequence of returns, health costs, spending surprises, anything like that. But this is just a spectrum for conservative to aggressive outcomes. So wrapping up here, we have a target portfolio of about $1 million to fund $77,000 for 25 years at a 7% real rate. That's going to need anywhere from $1,000 to $2,000. That's going to need anywhere from 1,000 to 2,000 shares most likely. So we tweak spending, return, or dilution and watch required shares change. So hopefully this planning was helpful. It's just my basic understanding of what's going to be needed for retirement in 5 years, as soon as 5 years from now. I think that can be funded from Palantir. Certainly if you already have an existing holding of Palantir stock, I think it's going to be, to tease the next video, it's going to be paying dividends to have a ownership stake in Palantir, as always. So I'd love to know your thoughts. Until next time.